What's going on, FUD Nation? Welcome back. Today we have a very, very exciting conversation between me and none other than the one and only Pomp from Twitter. That's right, a human embodiment of a Bitcoin bull run, an everlasting green candle in the bear market. Anthony Pompliano is here on FUD TV to share with us some of his insights in working on the institutional capital side of the cryptocurrency revolution. This is an amazing conversation. I'm so excited to bring it to you guys now. I hope it benefits you all. We talk about everything from institutional capital to cryptocurrency, ICOs, Web 3.0, STOs, and more. Strap in. Today is a big one on FUD TV as we welcome none other than Anthony Pompliano. Welcome to FUD TV, our good friend Anthony Pompliano, the human embodiment of a green candle in the absolute bear market. How does it feel to be here on FUD TV? How you doing, Anthony?
I'm doing well. How are you? I appreciate you having me.
I appreciate you coming on. Well, let's just dive in right away with a little bit of background. Obviously, pretty much everyone in the cryptocurrency community, especially those on Twitter, are familiar with you. Your name alone is reminiscent of good feelings in the cryptocurrency market. But for those who might not be completely familiar with who you are and how you came to occupy your current role in the cryptocurrency community, could you fill us in a little bit on your backstory and what you're up to right now?
Yeah, spent 6.5 years in the U.S. Army, built and sold 2 tech companies, ran a couple of product and growth teams at Facebook, was hired as the head of growth at Snap, and then started an early stage venture fund called Full Tilt Capital with my partner Jason Williams. And then we sold the management company of Full Tilt to Morgan Creek Capital in the beginning of 2018. And today, myself, Jason, and the founder of Morgan Creek, Mark Yusko, run a business called Morgan Creek Digital that's focused on deploying institutional capital into the digital world or the digital age as we think about it, with the majority of that being crypto or blockchain related.
So what would you say is, I guess, your attitude right now, looking at 2019? You've done a lot of this institutional, you've worked both on the receiving end and the deploying end of institutional capital. What's your attitude? Obviously, we'll get specifically to institutional capital in a second, but what's your attitude personally towards crypto in 2019?
Look, 2018 was vindicating for us in that we've been kind of pounding the table for the last 2.5 years, saying ICOs were bad investment opportunities, probably not where to put capital, everything from the regulatory concerns to just bad teams building bad companies, and then also no investor governance or rights. I think last year we really saw that all came to fruition. It'll continue into 2019. Those investors that chose to deploy capital there, I think, will really pay for it in their returns. And then that leads us to, where do you deploy capital? And so we've got a long-term bullish look on Bitcoin. We're very bullish on this idea that every stock, bond, currency, and commodity will be tokenized or digitized. And then I think that we, fundamentally see a shift in a lot of infrastructure companies or kind of for-profit equity companies beginning to build for this blockchain or digital space. And so we're excited about deploying capital there as well.
So I think what gives you a very unique insight is that you're kind of hovering the line here between someone who understands and participated in the retail side of this phenomenon and someone who is very much so interacting with, on a daily basis, those who are on the institutional side of what could be the sort of next era of this phenomenon. And so what, from your perspective, is the mindset of these institutional capital holders, and what are the hedge fund guys thinking about crypto right now?
Yeah, so I'll separate institution out into 2 worlds, right? So one is what I think of institutional as, kind of university endowments, pensions, foundations, sovereign wealth funds, et cetera. So these are permanent capital allocators who have long time horizons and tend to be fairly sophisticated and thorough in their work. Then there's also what I'll call another world of institutional that it's really more like banking, right? So these are hedge funds. These are kind of large legacy financial institutions. They're probably less capital allocators, right? So they're not going around and giving money to a bunch of different funds and strategies or managers. They're more playing market maker. They're more trading. They're doing different types of things. And so I spend most of my time with those endowments, pensions, foundations, sovereign wealth. So I'll talk about that. Look, they're intrigued, but they're still figuring it out, right? I think before last year, the conversations that they had, or the people that they spoke with, usually were relatively inexperienced or unsophisticated fund managers. Usually those people were pitching them on a qualitative argument that, hey, this stuff's going to change the world. Why don't you, kind of join the revolution? And then the third thing was they read all the headlines. And so all they read was, price is super volatile, lots of criminal activity, it's unregulated, all this kind of stuff. And so, my partners and I have spent, the better half of the last year, going around the country and educating and really explaining to these people, look, this is just a piece of technology. It's going to be applied in very different ways. There's going to be a lot of value created here. But the argument we make as to why they should invest really has much less to do with the qualitative, let's go change the world, and much more to do with the quantitative argument, right? As you're a capital allocator and you want to go ahead and look at this, you shouldn't go put, 20% of your fund into this, right? That's not what this is for. This is definitely an alternative investment where you need to size it right, kind of 100 basis points or less. You need to get exposure, though, because there's a lot of intellectual and financial capital going into the space. There will be some very, very big winners, but those winners are going to have a non-correlated profile, and they're going to be fairly asymmetric return profiles. And so anytime you can take an asset that is non-correlated and has an asymmetric return profile, introduce it into a portfolio, you can actually reduce the overall risk of the portfolio, and you can make it pretty attractive to those capital allocators to do that. So that's really the message as we kind of run around the country here and try to educate folks.
I think that's a very good point. It's that when you bring up right sizing asymmetric profiles, of course, I want to ask a couple questions before we return to those topics. But how successful have you been at essentially introducing a quantitative approach here? Because I believe that, we've seen a domination of a philosophical, idealistic approach to investing in cryptocurrency, which has its highs and lows. And then we've also seen, I strongly believe, like you, and I brought on an amazing trader yesterday onto the show who's making millions in the bear market because he understands quantitatively that if you're playing these markets right, kind of more akin to your market maker friends, that there's a lot to be gained here if you know how to work within these markets because of the volatility. So how successful have you been at explaining the quantitative benefits of a right-sized sort of asymmetric profile to these, I guess, more legacy investors, bigger investors?
Yeah, look, over the next couple of weeks, we'll make a couple of announcements that I think will really, kind of excite people. But what I can say right now is these investors are incredibly smart. They're incredibly sophisticated. They understand that the likelihood in an entire industry where such a high percentage of intellectual capital is going into is going to go to zero is very low. They also realize that it's incredibly risky, and so they need to size it right in their portfolios. But I think generally the reception has been quite strong. There's definitely people who are saying, look, I'm intrigued, but I kind of want to wait a little bit and see how this plays out. There's some people who say, I need some regulatory clarity before I really jump in. And then there's others that say, look, I'm comfortable being early. I actually like that. I like the idea of being able to capture, more upside, even though I'm taking more risk. And so I think you get a, kind of a full spectrum of responses. But overall, there's very few, 100% negative, we'll never touch this type feeling. I think it's much more kind of healthy skepticism all the way on up to people who are enthusiastic.
Yeah, well, that's great. I know that you have a campaign you've been sort of crusading on of late called the Get Off Zero campaign. Would you care to enlighten the audience sort of about the background of that and how that's going? I think it's part of the same conversation. So let me know.
Yeah, Get Off Zero is just the idea that, every single capital allocator has different goals, right? So some of them are trying to protect wealth. Some of them are trying to increase wealth. Some of them have unique challenges because they've got cash flow issues. But really the thought process here is that crypto and Bitcoin specifically was the best performing asset over the last 10 years. It outperformed the S&P, the Dow, the NASDAQ, et cetera. And so it's actually been the best performing asset over the last 5 years. It's outperformed over the last 2 years in terms of those public market comps. And so if you have zero exposure, you're wrong. Now, I don't know if you should have 5 basis points, 10 basis points, 50 basis points, 100 basis points, but you can't have zero. And so this idea of like getting off zero is just gaining exposure to the asset class, because once you get skin in the game, you actually make an initial investment, no matter how small, you'll pay attention, right? You'll learn, you'll understand what's going on. And so just getting people off of zero, getting them exposure in any way, whether it's venture, direct, really pushing these people into this new world at a time where prices just drew down fairly drastically, and there's plenty of people who are a little nervous.
Yeah, I think that's great. I'm almost envious of anyone just getting their skin into the game, into crypto. I'm sure you can relate to some degree. So I guess from that point of view, what would you say is going to be the most impactful sort of change that we can maybe look forward to in 2019, vis-a-vis these bigger investors, or just in a larger sense?
I actually think there's not going to be that much impact, right? So I'm of the belief that most of the institutional capital that's coming into the market right now, you're not going to see reflected in price, because if they're investing in equity or kind of illiquid type investments, I always talk about this Jeff Bezos quote where somebody congratulated him on his return on the earnings report, and he said, "Look, this is the fruit of the work that we did 3 years ago." Right.
Mm-hmm.
And what we're doing today is going to be baked into our returns or our earnings report 3 years from now.
Yep.
So I think crypto is very similar in that, what we saw in 2017 was really the work that was done between like 2013 all the way through 2016. And so, right now, the work that's being done is going to be shown in 2020, 2021, 2022, 2023. And so that's one piece of it. Now, if the institutions actually want to get direct exposure, they should write pretty big checks. And so if all of a sudden they started going on exchanges and trying to buy anywhere from $5-10 million all the way on up to a couple $100 million worth of any asset, let alone Bitcoin, being the most liquid, it would move price. There would be an impact on the market. And so most of that activity is actually happening in the OTC market, which we have very little exposure to, or transparency to. And so I think a lot of the institutional kind of entrance into this market is going to show very little to no impact on prices. But over the kind of the next 3 years or so, as more and more people come in and a lot of this infrastructure gets laid, and some of the stories come out about who owns what, that's where I think you'll start to see some of the impact on price in the future.
And as far as assets that you find people are interested in, is it mostly just Bitcoin, or is there other stuff that's being talked about?
Yeah, so it really depends, right? I think that one of the talk tracks that I like to use is just getting people to understand the US dollar is a digital currency, right? So over 90% of it is not in physical paper or coins. It is actually a digital currency. It's the first digital currency that most people have ever interacted with in their life. Now, there is another digital currency just like that, where over 90% of it is not in physical paper or coins. It happens to have a different monetary policy. It happens to be backed by a different quote unquote government, right? But it's governed by software and math, and it happens to be called Bitcoin, right? And so it's decentralized, and there's different monetary policy, but they're both digital currencies. They just have different pros and cons to them. And so once we can get people, most smart people understand, okay, I got it. I might not believe that Bitcoin has sustainable value, but I at least understand that just like the US dollar, Bitcoin is digital currency. Once we get there, then we kind of work down the, down the pole, if you will, to really try to get them to understand some of the other top liquid cryptos. The problem is that those are much harder to describe. One, two, it's much harder for them to wrap their head around why somebody would use these, why they would be sustainable, how to value them, etc. And so I think what you get is, from an institutional seat, you're seeing the press talk about Bitcoin. It's the easiest one to understand. It sounds like money or gold, right? You've actually got buckets of capital already pre-allocated. So you've got, a cash bucket. You've got maybe an inflation hedge bucket, stuff like that. So you can actually deploy capital into this stuff and kind of feel comfortable or underwrite it. And so I think Bitcoin gets the benefit of kind of the notoriety and some of the structural things that it fits into. But I think over time, more and more of the liquid cryptocurrencies and the illiquid projects or companies will enter into those portfolios as well.
Yeah, it's very interesting. And of course, as I've gone through my own personal life and here making content, it's a lot easier to explain a single digital currency, or I guess it's just a different task to explain a digital currency that could become a new reserve currency than, for example, a tech trend that could replace a previous tech trend, which requires a sort of aptitude of understanding technology products at their current state and where they're headed. It's kind of a different narrative. It's more about digital products than it is about a currency revolution or a monetary revolution. So I totally understand that. I want to switch gears slightly here to talk about STOs. I know that they have been hotly discussed, hotly anticipated. I actually had the pleasure of discussing potentially tokenizing commercial real estate assets with you a few months back. And now we've seen, offerings such as that by Harbor go live, which is, a dorm room in South Carolina. I want to sort of start at the base level here, which is, how do STOs, what do you think they're going to have as far as an impact on the general market? And then sort of unwinding that a little bit and talking about how it impacts more retail investors, because I'm sort of the opinion that the impact for retail investors will be more or less a wash. What do you think about that?
Yeah, so the core thesis that I have kind of all around crypto really is just every stock, bond, currency, commodity will be digitized at some point in the future. Could be 1 year, could be 100 years, right? But at some point in the future, every single one is digitized. And STOs is a regulatory compliant way to do that today, right? So it's tokens based on blockchain, cryptographically secure, et cetera. As you look at this, though, it doesn't change the underlying asset. So if I tokenize a building, it's still a building, right? The building's not going to 10x in a year,
Correct.
Right? Value. You're still going to get the similar return profiles. Maybe you get a little bit of a premium because of liquidity, or actually maybe a little bit of a discount because of liquidity, depending on the asset in the market. But really, what it comes down to is just creating a more efficient, compliant, and attractive market for a global audience. And the way that I normally describe this is, if you forget everything you know about the financial system today and you were to rebuild it for a mobile first digital world that is global and has to kind of cater to people from different languages, different time zones, different jurisdictions on the regulatory side, et cetera, it probably wouldn't look like what it looks like today. And so the beauty of kind of this tokenization or the digitization of stocks, bonds, currencies, and commodities is we get to build some of this stuff from scratch. Now, we're going to borrow a hell of a lot from the traditional world, but we also get to improve or create some new things as well. And I think that's really kind of the impact on the traditional financial system, right? Is we can create something that is better over a long period of time than what we currently have. Now, what does that mean for retail crypto investors? Frankly, nothing, right? And I agree with you that if you're kind of the crypto speculator that joined, Coinbase or Binance or something, and you said, hey, look, I'm going to put a couple $100, couple $1,000 in and cross my fingers and hope I become a lottery ticket winner, you're probably not the guy who or the girl who's interested in investing in a building that's going to drive 8 to 10% annualized interest. That's just not your investment philosophy. It's not your interest, right? Now, maybe it should be, because buying and speculating on these lottery tickets or altcoins might not be the most sustainable investment thesis, as we've seen over the last kind of 18, 24 months. But what I do think is you're still going to get people who, if you're a high risk, high reward type, psychological investor, you're going to gravitate towards those types of investments. If you're more steady Eddie, hey, I want my kind of 7 to 15% annualized returns. I want to go pick stocks. I want to get exposure to commodities or real estate, things like that, in a more traditional sense. Then you're going to go and you're going to find these tokenized securities. You're going to invest there. So I don't think that much changes. It just happens that the legacy crypto retail investors happen to be more speculators than what I would consider, kind of traditional investors that manage risk, et cetera. And so what we're going to have is new investors who have that more traditional mindset come into the market to buy up these tokenized securities, because the speculators probably just aren't going to do it.
Yeah, I tend to agree, and I want to return back to the point you made about asymmetric profiles. Is this, these STOs will not be asymmetric profiles, right? You will be able to lose as much as you have to gain, whereas, and for example, say you want to buy a token in a commercial real estate asset that I'm guessing most likely you are not an expert in. And so now you're, speculating on a non-asymmetric setup where you could lose just as much as you could gain. And you're in a market where you're actually, competing with experts. And on top of that, there might be a premium on that equity that is not existing in the current world. And so I guess I love that STOs will bring X trillion dollars onto the blockchain. But I guess I just kind of want to hammer home to the current audience, I guess, in cryptocurrency land, that this revolution of sorts may not impact them whatsoever. And that those new investors, as you were saying, into the blockchain are really just the old investors in the more traditional world coming on the blockchain.
Yeah, I think there's 2 points here, right? One is people got to get educated, and this is true in the legacy financial system, and it's true in the new financial system. We've done a horrible job educating citizens of the United States, and even globally, on different financial topics, on different investment kind of mechanisms. How do these things work? How do you price them? How do you underwrite risk? Why would you do that? What is modern portfolio theory? All of these things that if you're a professional in investing, you've either heard of or looked at. Most retail investors have no clue about that stuff. So we've got to do a better job of actually educating people. The second thing is, one thing that we will see for sure is some of the early tokenization projects will absolutely come in and try to take advantage of those who are uneducated. And so just like we saw in kind of the ICO and altcoin boom, where people were just throwing anything at the wall, raise $50 million, well, that's pretty scary when all of a sudden you're taking a building, let's say that maybe you own, and you want to tokenize it, it's worth 10 million today, and you go out and say it's worth 25 million. Professional investors laugh at you, right? But the unsophisticated would say, hey, I'm going to own a building. Real estate always goes up.
Mm-hmm.
Well, there's a hint of truth in every kind of joke, but at the same time, that there's a lot of kind of concerns here, right? And so I think what we've got to do as a community is make sure that we're policing this stuff and really calling out the people who are being egregious or overly aggressive. And then at the same time, I think that we got to continue to educate folks, and hopefully those two things kind of meet in the middle. We've got a bunch of good actors who want to help people unlock capital markets while also giving a great return.
Yeah, I think that's a great point, and it just underscores in the end that the STO game is going to be as dicey as the current stock market or any other game that currently is available to bigger investors. So I guess let's unwind a little bit and step back into sort of territory we were discussing a little earlier, sort of the Web 3.0, which is to me this other narrative, right? Which is sort of a longer term narrative. And to me, one of the more, I think, ideologically exciting things for people is the idea that we're not just building a replacement for the dollar or gold, but we're building a new Uber, a new Instagram, a new Facebook. What is your sentiment towards Web 3.0? Are you a believer? Are you a supporter of the movement? And do you spend any time at all discussing these kinds of assets in your goings on?
Yeah, so there's a couple pieces that are really important on this topic. One is decentralization alone is not very interesting to majority of the world's population. So, take Uber, for example. Uber works just fine for me, right? I call a car, shows up, I get in it, takes me where I need to go, charges me, and I'm done. And so that centralized service is actually okay. If you told me I'm going to create a decentralized Uber, I wouldn't switch. Right? The decentralization isn't compelling enough for me just to switch if you have feature parity, if it's the same product, it's just decentralized, right? Now, if you come and tell me, hey, I've got a 10 times better product that is similar to Uber, right? Maybe it's got more drivers, or it's lower prices, or it's a better experience, or the car follows me around everywhere, so I never have to wait on a car, whatever it would be. Okay, now I'm interested. And if you create that 10x product and it happens to be decentralized, well, I may use it, but I'm not going to use it because it's decentralized. I'm going to use it because it's a better product. And so I think that's what we've really got to keep in mind here is decentralization is something that can be very important, but it can't be the only thing. Right? You actually have to still create products and services that people want and need. And so I think that that's a really important piece that gets lost a lot. The second thing that I would say is I'm not very interested in what we call PDFing Web 2.0. Right. So if you basically take, the example a friend of mine, Lawson Baker, told me once that I really like is, when the internet came out, there was some news companies, take the New York Times, right, or something like that. They just, the internet. Let's take the newspaper every day. Let's PDF it and then just put it on a website. Mm-hmm. Well, there's no in doing that. Like I get it, right? So okay, now people can read it on their computer rather than reading it in the newspaper. The problem is by just simply PDFing it, it's not very revolutionary, right? You don't get the benefit of kind of dynamic editing, changing headlines, updating stories, distributing it through different channels. All of the benefits that the internet brings to the publishing world would be completely lost if all you did was took the newspaper, PDF'd it, and put it on a web page. And so I think that's what we're seeing right now, right? A lot of the ideas that we get pitched on a daily basis are just the PDFing of Web 2.0, right? And of all of the companies we have today, people are like, let's just decentralize. Let's put it on a blockchain. What I'm much more interested in is this idea of using the unique aspects of a blockchain and applying it to build new things the world's never seen before. right? And so Ben Horowitz was recently asked about, what's the killer app of the blockchain? And he said, look, first, no one ever gets the killer app, right? No one thought Facebook was going to be a killer app of the internet, right? But two is when mobile phones came out, right? It was actually slower. They had, less computing power than a computer. It had smaller screens, right? It had all these things that people forget were actually worse than a PC, but it had a couple of things that were an advantage. It was a little bit more mobile, right? It had GPS, it had a camera, right? All these features that, well, look at the dominant platforms today, right? You look at, something like Uber, or you look at something like Instagram. Those could not have been built without GPS or cameras in the phone, etc. Those new features were used to build new companies.
Yep.
And so I think that you got to see with the blockchain stuff is what are the new types of companies that are going to leverage the unique aspects of a blockchain that previously were unavailable in order to apply it and build something the world's never seen. And that's really where we're spending our time. And I think where most founders should be spending their time as well.
Yeah, you echo so many things that I preach on a daily basis, which is that no one cares about that your product uses blockchain. No one cares about that your product is decentralized. People want something that is better than, and not slightly better than, but way, way, way quantitatively better than their previous service. That's why people stopped using taxis, because it wasn't slightly better to get an Uber. It was about 1,000,000 times better. And it was time and energy and money. It was across the board better. And I think that that's sort of the missing component, and something I preach on a daily basis, which is that the killer DApp is not just a slightly better product. It's something that cannot be created with current internet, and it is something that leverages the strengths of blockchain and also, sort of points out weaknesses of Web 2.0, I guess. So I really appreciate that perspective as well. So I know we've talked pretty much about a lot of the things I wanted to cover in a very rapid point. But I guess on that, are there any Web 3.0 companies that you said you get pitched a lot? Are there any that you actually are interested in that you're at liberty to discuss? What has excited you, I guess, in this sort of well of Web 3.0 and I guess deals you've seen?
Yeah. So what I will say is, I won't name names, but things that I've been thinking about that, and these are more just seeds for founders to go and kind of run with. But if you look at every single interaction you have on a daily basis as a human, whether it's with a machine, whether it's with an organization, whether it's with another person that relies on trust, that's the opportunity for blockchain and crypto, right? Is to go disrupt that stuff. And so why is that? It's because blockchain is based on trust, right? Today, I wrote this thing about central banks, and most of the central bank reserves are assets that come from the traditional legacy world. So these are foreign and domestic currencies, government bonds, corporate equities, etc. Well, every single one of those has some sort of counterparty risk and relies on the full faith and credit of the United States government, or relies on some sort of trust or belief, but it's not verifiable. Right. And so this idea that
how often do you hear that expression, the full faith and credit of the U.S. government? My folks love that expression more than anything.
Yeah. And from my standpoint, it's like, oh, all of a sudden you're telling me now a central bank could put on their reserve asset balance sheet anything that is verifiable by math and code is incredibly powerful. You start to reduce counterparty risk, right? You start to actually be able to say with confidence, this is what we own. This is how many there are in the world, right? This is what it is worth. And that's very different than where we stand today. So I think that, when going back to this kind of Web 3.0 thing is, it isn't very exciting just to build another gift card, right? And use kind of a utility token to do that kind of stuff. What is really interesting, though, is to take existing technologies, right? So if you look at something like, commerce, for example, how do you use this technology where trust is important and bring it to people in the world that don't trust their government? They don't trust their currency. They have no access to the Western financial system, right? How does that work? Well, there's a whole bunch of people working on that, right? If you look at something that's a little bit more around like incentives and computing power, right? I think that there's a lot of people who are saying, oh, we can organize resources in a new way because there's this incentive mechanism that is tied to a monetary value. And so, there's all kinds of different projects doing that. Again, I don't know who's going to win, right? That's what we try to figure out on a daily basis is kind of where do we want to deploy capital and who do we want to support. But I think these are the types of things that really people need to be thinking about. And the one question that I always ask founders is, what are you doing today that you couldn't have done with the technology before you knew about blockchain? right? What is that one feature or that one, kind of product or that one business model that you're doing today that was previously not possible without blockchain? And a lot of founders can't answer that question, right? They have bad answers to the question.
Yep.
And so that's really kind of the focus here. And if founders who have a good answer to that question want to come talk, we'd love to talk to them.
Yeah, I find that really interesting. And I think like the internet of value debate is an interesting one to have, and something that I believe is strong, where it's sure, maybe you guys are bringing a service, but as people use your service, they're able to extract real value instead of potentially sentimental value or amorphous sort of emotional value. They're actually able to get real, something convertible into currency, and that's why I think in the gaming sphere, there's a lot of excitement with just simply item ownership and stuff like that, which seems mundane. It seems like it could be irrelevant. But the idea that your digital experience could be interwoven with your real world experience in a more concrete way, do you find that exciting, or is that still a bit tangential for you?
Yeah, I mean, look, there's people who are going to win huge there, right? I've said a million times that the people who won in the centralized world in the last 2 decades, they figured out how to do growth using the internet, right? And if you look, it's Twitter, Facebooks, the LinkedIn's, right, the Googles, etc. I think the people who are going to win in the decentralized world are the people who figure out how to use blockchain, crypto, and those types of incentives to do growth, moving forward. And so the people from the centralized world are likely not to be the people who win in the decentralized world. But we've yet to see who are those folks who understand this stuff well enough to use it as a weapon to grow. That is building momentum, and growth is the biggest advantage that a founder can have. And so we're excited to see, who some of those founders are, what their ideas are, and how they can use this stuff to grow. And we'll be deploying capital to help support them as they build their companies.
Awesome. So I guess let's move on to sort of closing remarks here. Do you have in your mind, a fair market value price for Bitcoin as it stands today? Do you like to discuss such a thing, or is it irrelevant to your current activities?
I think it's going to be worth more in the future than it is today, right? It's kind of the way that I think about it. I have fully converted and measure it in BTC. I look at it as a game of accumulation, and I couldn't tell you what the price is today. Don't care. I think it's going to be worth a lot more. I'm fortunate enough to be able to have a low time preference. I think that those who do will come out on top. And usually what I explain to people is, if you bought gold, you wouldn't be looking at the price of gold every day, right? Mm-hmm. You're not looking at the purchasing power on a daily basis of the US dollar. Right. Same thing here is you're talking about a currency, right? You're talking about kind of a store of value or a medium of exchange. If you have a long time horizon, you'll be all right.
All right. Well, let's wrap this up. Closing remarks. If you could say anything to the audience, what would you want the crypto community to be thinking about to know for 2019?
Long Bitcoin, short the bankers.
Awesome, man. Thanks so much for coming on the show. Have a wonderful day, and I hope to see you soon.
All right. Thanks so much. I appreciate you having me.
Take care, brother. I hope you enjoyed today's episode. Of course, if you did, hit that like button. And if you're not already subscribed to FUD TV, I encourage you, hit that sub button and click that little bell notification. That way you're made aware whenever we put out new content. A big thank you to Anthony Pompliano for taking the time to be here on FUD TV. We really appreciate your insight and work within the space. I'm curious, what did you guys think about our conversation today? Leave us a comment in the comment section below. I always love hearing from you, FUD Nation. Thanks again for everyone, whether you're new or old to the channel, for stopping by. I'm Elio Trades, you're watching FUD TV, and I will see you very soon on the next episode.